All right, today we are diving deep into one of the most important companies on the planet, NVIDIA. We're looking ahead to 2026 because that's when the undisputed king of AI is going to face a test that could really define the future for all of us.
And if you need any proof of just how dominant they are, look at this number, 85%. That's NVIDIA's share of the entire AI processor market revenue. They're not just a leader, they're practically the only game in town. And that brings us to the big mystery we're unpacking today. If a company is running the table this hard in the hottest market in the world, why is Wall Street so jittery? It's a paradox, and it's one that has everyone talking.
To really get to the bottom of this, we first have to look at the completely conflicting signals the company's been sending out. I mean, it's this wild story of record-breaking success clashing with some pretty serious fear.
So check this out. On one hand, you've got these absolutely blockbuster earnings. We're talking Q4 revenue for fiscal 2026 shooting up 73% year over year, just smashing all the estimates. But then, literally the next day, the stock takes its biggest nosedive in ages, wiping out $260 billion in value. How does that make any sense?
So, to figure out what's really going on here, we have to do what the pros do. We've got to ignore the splashy headlines, peel back the layers, and see what the hardcore analysts and engineers are actually looking at. And that future has a name, Vera Rubin. It's slated to arrive in the back half of 2026. And you have to understand, this is not just another faster chip. It is a completely different way of thinking about AI computing.
See, the Rubin platform isn't a single part you just, slot into a computer. No, this thing is an entire pre-built supercomputer in a box. It's a whole system of 6 different chips, a new CPU, a new GPU, plus all these specialized chips for networking and data, all of them designed from the ground up to work as one single ultra-efficient machine.
And the performance jump? It's huge. We're talking a 5-fold improvement in AI inference performance. And inference is just the fancy word for actually using an AI model to make a prediction or generate content. So 5 times better than the current top-of-the-line stuff. But here's the number that really gets businesses excited. That crazy performance leap leads to a 10-fold reduction in the cost per token for AI inference. What that means is running these giant AI models is about to get way, way cheaper. That should create even more demand. So, amazing performance, amazing economics. What could possibly be the problem?
Well, all that power comes with a price tag, a very real and very, very steep one. This is the hidden catch, the problem that's growing exponentially and has so many long-term investors really worried.
Now, what's really fascinating here is the trend. Just look at the power draw. The H100 chip used 700 watts. The newer B200, 1,000. Okay, but look at the jump to Vera Rubin. The GPU alone is going to pull 2,300 watts. A full system, 3,700 watts. This isn't just going up a little bit each time. This is a curve that's going vertical.
And that is a massive problem. For data centers, that kind of power consumption means absolutely insane electricity bills and huge logistical nightmares. I mean, you can't just plug these things into the wall. This soaring energy demand is becoming a real physical and financial bottleneck for the future of the whole AI industry.
So now we have a paradox inside of a paradox, right? The technology is getting exponentially better, but it's also getting exponentially more expensive to run. So why in the world have top firms like Morgan Stanley suddenly made NVIDIA their #1 pick, completely flipping their old stance?
This quote from an analyst at Morgan Stanley really nails it. He's basically saying the stock went nowhere for a while because everyone was afraid this crazy growth just couldn't last. But now, he and a lot of other experts are looking at the underlying data and saying, you know what? We think those fears are overblown.
Okay, and to really understand their logic, we got to quickly look at this one key metric, the forward PE ratio. All it is a simple way to see if a stock is cheap or expensive based on the profits it's expected to make in the future. Generally, a lower number is better.
And boom, here's the payoff. Right now, NVIDIA is trading at just 23 times its estimated earnings for 2026. Now, for a company that's growing this fast in the middle of an AI revolution, analysts look at that number and they think it's a surprisingly good entry point. They think the market has priced in way too much fear and not nearly enough of the growth that's still to come.
So, at the end of the day, the bull case really comes down to 4 big things. First, their competitive advantage, their moat, is huge. Second, most big companies are just getting started with AI.
Third, the biggest cloud companies are planning to spend a mind-boggling $700 billion on new equipment in 2026. And finally, the really smart money, they're already looking past 2026 and getting hyped for 2027.
And all of this brings us right to the next great frontier for artificial intelligence. And it's all defined by this core struggle, this tension between raw performance and the power it takes to get there.
So really, the story of NVIDIA in 2026 is actually the story of the entire AI industry. It is a super delicate, high-stakes balancing act. You've got this revolutionary new power on one side, but on the other, you have the massive energy bill and a market that can't decide if it should cheer for the future or panic about the cost.
And that leaves us with the final and most important question. The technology is getting more powerful at a pace that is just breathtaking, and it promises to change everything. But as it does, we have to ask ourselves, can our world actually afford the energy bill for this revolution?